Good morning, fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market preparation video for June 6th, 2018. Hey everyone, yesterday we had a real fun day in the market with the NASDAQ and the Russell notching out new record highs. But we had kind of an interesting setup here yesterday with the Dow and the SPY just kind of chopping sideways. So let's talk about that for a second here, but let's look at the Qs first. The Qs jumped up nicely, continuing to hold strength. And although there was a little bit of selling during the morning, the bulls stepped in and pushed higher. Now this morning, as I currently look at the market, the futures are pointing to a sharply higher open. At the moment, we're looking at more than a triple point move higher in the Dow, and that's also pushing up the NASDAQ. So a breakout is looks like it's going to happen at the open today, pushing a little bit higher. Now, I want to caution everyone about chasing a trade, because this would be the 7th straight day up for the NASDAQ. And that would be a reason for concern, to be real careful not to chase this. We could be reaching the maturity of this run. Now, that doesn't mean it has to pull back. That just means you should be a little bit cautious. If a problem that I used to deal with years ago was this fear of missing out. You know, you miss the trade, and so you watch it go and you watch it go, and finally you just can't take the pressure anymore. And you finally chase into the trade thinking this thing's never going to stop and pull back, and then it almost immediately does. That is a symptom of chasing. That is a symptom of buying at price resistance. So be really careful about that as this rally matures, that you're not chasing into trades. You should be well into profits on this rally right now. The Q is looking very, very strong, poking up there, and looks like we're going to officially get that breakout. The IWM showing incredible strength and just continues to power higher here, with a great showing yesterday as those small caps continue to be the leader in the market. So lots of strength there. So what's the deal with the diamonds and the SPY? Well, diamonds and the SPY have a lot more of international companies, the bigger internationals, where there is the risk of, you know, these trade negotiations creating some problems. So they're lagging behind significantly, and actually the places where we have to watch pretty closely for clues of a sell-off. But here's the thing. Even though we chopped sideways yesterday, I consider this a victory for the bulls. And the reason is we had an amazing showing on Monday, just a real impressive showing of bullish strength as we pushed higher and broke back above this resistance area. And that landed us right back in this consolidation zone. But that's okay. We can stay in consolidation. As long as we have a couple indexes leading the market, the Dow, the SPY can remain in consolidation, and we can remain in a nice bullish pattern with really good stocks to trade. So kind of keep that in mind. Resting there yesterday and actually being able to hold pretty close to flat from where we opened to where we closed, I think is a victory for the bulls. We didn't get that selling come in to push us down and take back that nice bullish move that we've had. And we've seen a lot of that recently. We get that nice bullish move. Day or two later, we take it all back. Well, yesterday we held on to that, so I consider that to be a win. And this morning, we're seeing those bulls push higher. So this morning, we're seeing a gap up open here in the Dow. Now, that could certainly change as earnings come out and economic data gets released, but we're pushing back toward that 25,000 level, that 250 level here in the Dow, or the diamonds. And that has served as a significant level of resistance. So it's time to start being a little bit cautious about chasing or rushing into a trade. We could be reaching that point where a little bit of pause, that doesn't mean it has to be bearish, but a little bit of pause, a little bit of profit taking, a little bit of pullback could occur just about at any time. So let's kind of watch that. This gap up this morning, I'd be really cautious about racing into it. Let's take a look at the SPY. SPY has held up very, very well. We also here broke above this resistance level, broke above our consolidation, and held that yesterday. So again, I consider that a win for the bulls. And this morning, we're getting that gap up open, that opportunity that we could challenge these next resistance high levels in the market. So keep that in mind. We continue to push. Our trends continue to be maintained. That's a very strong signal for us in the market. We have two indexes really leading, breaking out to new highs. The SPY holding above its consolidation of the last couple 3 weeks. That also, I think, is a bullish sign. Let's take a look at the VIX. The VIX in its made another day lower move yesterday. We're approaching this support level. Okay, we're right there near price support in this long-term downtrend that we have broken above. That could serve as support, and you can see that's coming very, very close. So we want to watch that. I think we may be reaching the end of this maturity, or the maturity of this rally. At any time we could start seeing a little bit of profit taking coming into the market. So watch that closely. Also, let's take a look at T21-22. Whoops. Oh, just a second. There we go. T21-22, the 4-week new high, new low ratio. And as you can see, we're pushing up here toward that bearish reversal zone. A gap up this morning is going to put us up here in this high level. Now, that doesn't necessarily mean we have to fall directly from there. We can stay up here for a period of time, but it just gives us that little bit of caution that we may be looking at that time where it's time to start taking some of those profits in these trades, and to be really, really careful or watchful of clues of selling starting to come into the market. Again, it doesn't have to mean that we're going to immediately flip to bearishness. We could just go into a consolidation. But when we look at a market like this that's showing all of those signs, we're 7 days into a rally on the Qs, we have to take a little bit of pause and be careful not to chase. So watch that closely as we move forward. On the economic calendar today, we have, just a second here, on the economic calendar today, we have 3 potential market moving reports today. We have international trade. That's expected to stay pretty stable. There's a deficit there, but stay pretty stable this reading today. Productivity and costs are expected to show a little bit of gain in productivity, and also a little bit of gain in those company expenses as they produce products. And then, of course, the EIA Petroleum Status Report is not forecast forward, so we're just going to have to wait for that number to come out. Obviously, oil has been a very big component of the market here, and if we were to see a building of supplies, a continued building of supplies, then that could affect oil prices. So kind of keep an eye on that number at 10:30 Eastern this morning. Other than that, we have mortgage applications that are already out, and treasury strips here at 3 p.m. Those would not be expected to move the market at all. On the earnings front, we had about 46 companies reporting earnings. The thing is, there's really none of the really big names coming out to report earnings today. So this morning we have 5 reporting earnings, but not anything that you would consider to be a big market mover. And then like Signet Jewelers this afternoon. So again, none of the big names that you would expect to really move the market around a lot. So right now we're dealing with bullishness that's really coming out of Asian markets showing strength, and a European index is showing strength this morning. So it looks like we're going to get that nice bullish open this morning that we were probably all hoping for. And I want everyone to be a little bit cautious about watching or chasing into stocks, because we may be reaching that point where profits will start being pulled off of the market. With that, everyone, hey, I want to wish you all a fantastic day. I hope you find these videos helpful. I do want to thank everyone for all of your kind comments. So please do me a favor, click that subscribe button on YouTube and the follow me button on Facebook. Click those thumbs up buttons. That helps me a lot. And again, please feel free to share comments if you feel the video is worthy of that. I do appreciate that. And also feel free to share this video with any friends and family. It's open for everyone. Remember, I don't really do this just out of the kindness of my heart, okay? I do this as part of my daily preparation. It's important for me as I prepare for my day to prepare or to be prepared for my trading day. And so I try to take an unbiased look at the market without trying to pick a direction or trying to predict a direction. I'm just taking a look at what the signals are in the chart. And if you find that helpful, I hope that you will take advantage of that on a consistent basis, because I do turn out this video every day. Also, if this is the first time you've seen this information, please know that I do a morning blog note every morning that's posted on the website. Please feel free to visit there. You'll find a link in the description below. Everyone, have a fantastic day. I wish you great profits. We'll talk to you all very soon, bright and early Thursday morning. Take care now.